What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is July 7th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I'm here today to talk about what is likely my most unpopular yet high conviction opinions when it comes to Bitcoin and crypto that I see little to no one talking about, considering, and very well could be the determining factor about whether or not from here on out you are going to be making money in crypto or losing money. And I'm not trying to be hyperbolic in saying this. I really genuinely believe this, and I think you guys should consider it at least in your analysis, whether you agree or disagree. We're going to be diving into why I believe the end of cycle analysis is near. This is going to be a really interesting topic, and it's one which I'll continue to talk about over the next couple of weeks and months. But if you happen to enjoy this video, consider dropping a like, and let's go ahead and kick things off. So I want to talk a little bit here about a fundamental reality that I think is shifting in crypto markets. As someone who is more of an active swing trader, I made phenomenal returns in crypto over the last couple of years. I got in back in 2017 on a more active basis, been following the industry since back in 2011. The key point is that I want to signify that I understand historically basically the notion that a lot of people follow, which is that passively investing in crypto markets, DCA, HODLing, just basically focusing on the long-term cycle expansions has overwhelmingly been the best position to be in when it comes to crypto markets. And that is going to be the best way that you get exposed to crypto assets. I would absolutely agree that if you started DCAing and HODLing back in 2017 in some of the large cap plays, had a good exposure to Bitcoin and some of the established altcoins, you'd probably be better off than trading in altcoins, as a lot of people simply just didn't know how to navigate the market at the time or know how to actually take profits, etc. I believe that is starting to change now in a pretty substantial way. And I think the fact that Bitcoin has spent the longest period of time at a prior all-time high, in fact, we've been here for more than 4 months, about 4 months and a week now, at this prior all-time high range here, retesting back in the upper $60,000 to $70,000 range, and we're right now struggling to get back above that 200-day and actually get above 60K. This is all pretty indicative of the point I'm going to be discussing today. I think it's a good reason why what we've seen here has been one of the most substantial corrections at a prior all-time high in the past. And I want to go ahead and just take it here to one of the most familiar charts to a lot of people who are interested in cycle analysis, and that is taking a look here at the logarithmic chart for Bitcoin. Now, a lot of people here, when it comes to Bitcoin, are always coming back here, taking a look at the logarithmic chart. They're considering the halving events. They're talking about the kind of predictive model in which Bitcoin's price lays out over time. And they're absolutely right that historically speaking, this has been one which brings exponential returns, life-changing money, and outside of that as well, the ability to be pretty easily accurate at knowing when to get in and when to get out, when to buy during capitulative periods, and when be able to kind of get out if you wanted to trade the market cycles. But generally speaking, overall, because of its exponential returns over time, HODLing has generally been one of the best ways to go about this. That's the big reason, right? If you could stomach the volatility of 70, 80, 85% corrections, it really didn't matter where you bought Bitcoin, because longer periods of time given are going to give you much larger returns. It was likely almost a guarantee that you were going to make money, considering even though there were these big corrections, you had multiples of a 100x from the absolute lows to the absolute top of the 2015 to 2017 cycle. Back here in 2011, coming from $2 all the way up to $1,400, a 7x roughly speaking, 700x roughly speaking, probably a little bit lower, considering the cents on the low, right? Actually, technically it was an absolute low of $2. So again, more than 700x. 100x in this cycle. We can see here from 2018, coming from around 3,000, coming up here towards around the top here was around $69,000. So still, roughly speaking, a nice 20x here, right? A little over 20x. The main point I want to emphasize, though, is that with these diminishing returns here, we are going to see more and more struggle to make any kind of meaningful, impactful return on Bitcoin. I'm not here today to say that the number can't go up and to the right and that Bitcoin's finite supply doesn't set it up in a healthy position to continue appreciating as the money supply appreciates long term, but we are seeing very clearly the longest period of time we have stalled at a prior high. This is different than any other cycle in the past. If you go back here, for example, to 2020, we cleared through the prior all-time high easily. We can take a look back here from the 2013 high before the Mt. Gox collapse. Here in 2017, you still had a positive quarter going into it, a very short window of time, and then a continued expansion here. We have now seen a clear red quarter here, something which we've never seen here at Bitcoin's prior all-time highs. And while I don't think this is all doom and gloom, it doesn't mean I think Bitcoin's going to zero. I do think it means that the dynamic of just holding and betting on the expansion of time leading towards exponential returns on your portfolio, being passively investing, even in Bitcoin, I think is not going to be anywhere near as favorable as it was in the past. And you could maybe even do much better trading some of these bigger moves here in the markets, being able to lock in returns here and buy on pullbacks, right? And this is something that's not even just true for Bitcoin, but I think it's also true here for altcoins. We are seeing more moderate corrections over time, but you're also seeing much weaker percentage gains here. We, for example, on Total 2, which is, total market cap here, we haven't even been able to clear through the prior highs up here. And as we go down the list here of Total 2, we can see that that trend is even more clear. We topped out at 1.2 trillion, so not even getting above the prior figure at 1.7 trillion, a huge gap here, mind you. Like this is significant, guys. But beyond that, we take it to Total 3, which is go down the list here, it becomes even more obvious. We're at $783 billion, prior high was at 1.1 trillion. And if we go down to others market cap, right, we can see very clearly here, again, same exact repeated pattern here. Top at 362 billion, prior was at 500 billion, roughly speaking. So if we look back at prior cycles here, you're not seeing this kind of sustained solid correction at a prior retest of the highs, right? With the price data that we have to work with here. And I think this is, again, getting into the point here that we got to be a bit more eager to take profits along the way and wait for those healthy pullbacks, those mid-cycle corrections, as we would usually call them. I think those are going to become more and more frequent. I don't think you're going to have the predictable 4-year cycle that a lot of people were expecting Bitcoin's price in the broader crypto markets. And again, I think this is just a changing dynamic here, because as you get larger and larger here, as we are no longer a couple $1 million in the others market cap, or even just back in like, the 2018, 2020 period of time, from those lows, we were from a market cap of 7 billion to $25 billion for the broader altcoin market, excluding the top 10 plays in crypto, right? Very different dynamics from where we are at a $200 to $300 billion market cap range. You are multiples higher from where you were back then. It is going to require a lot more liquidity. It's going to require bigger catalysts. It's going to require bigger actual use cases for crypto. People are starting to come into the healthy question realization of whether or not this stuff does anything, right? You can't continue to expand market capitalization to billions and billions of dollars and not be able to at least sell people that you're working towards something meaningful. And I think a lot of people are starting to smell that, hey, look, let's cut the BS. Crypto is this kind of fun, speculative place where, you can make some life-changing returns. But at the same time, we're all kind of getting the idea here that this is just kind of the facade we put on. And meme coins, I think, are the biggest proof of this, that, look, we're just here to make money. That's what a lot of people in crypto are in for. I'm someone who, for example, I came in really from an ideological perspective, but I've realized by now, you just have to accept it for what it is. Whether you think it's a good thing or bad thing, this is where we are today. Projects with fully diluted valuations, even circulating supply market caps of billions of dollars, many of which don't actually do anything real. They don't create value on the outside world. That might come across as a really negative take, but it's the truth, guys, right? And meme coins, again, are the greatest proof of this. They just don't try to hide it from you. So keeping that in mind here, if we come back here to the charts, we can see very clearly that that's starting to manifest here within price. And again, a lot of people ignored us back in March and April when we started to kind of deleverage from altcoins, and now we can see very clearly we're down about 33% in total market cap from that period of time, even with the recent rebound. And when it's low, it's 42% lower from when we started to really sell our positions back in April. So this is a point here I want to make that, again, we're going to have to see over time if the 4-year cycle is going to play out. I think you're already starting to see some of the cracks show here. I think that we are going to see some clear warning signs outside of this correction we've already seen here, both in Bitcoin and altcoins. I think it's going to be very clear and abundant the longer we have to push sideways here at this range, and how difficult it will be to get past 70K, considering Mt. Gox sell side pressure, considering the German government selling, considering the consistently weak ETF inflows as time has passed. Guys, I'm not making up these numbers. Take a look at it. January and February were phenomenal months. It left me double guessing my concerns about the ETF, really being this, maybe the ETF really was going to be this means for institutions to just swallow up all the Bitcoin. But as we've seen over time, as GBTC outflows have waned, we are seeing something much more concerning than GBTC outflows. That has come to an end. What we are lacking now is inflows, institutional money. And if you just take a look at the global charts here, we can see that there have been many weeks sometimes where we're seeing outflows, really a general topping here around 1 million Bitcoin being stored in these exchange traded products globally. And there's been major outflows from global ETFs. You're seeing here again a real stagnation in the trend here for the BlackRock IBIT ETF. All right, just clear signs here that we're starting to slow down here in this broader trend. And when I take a look at some of the, altcoins, for example, in the recent rebound, I know a lot of people are wondering whether or not I'm willing to start buying in here, because really altcoins are where you're going to make the money, guys, in crypto markets. The thing is, and this leads me to talking about trading, right? If we can lean into our momentum averages here, right? If we can start to see, for example, when altcoins can start to reclaim those shorter term time frames, right? Which really they hadn't been able to here. Every single time we weren't able to hold on the 50 EMA, the orange line. I'll go ahead and get this set up here where you guys just see those. I'll turn off the kind of the longer term moving averages here just to make the chart a bit clearer. But take a look at this here, right? Ever since back here in this period of time, really actually no, sorry, we can zoom back even back here since back in March when we had this significant flush down, right? We had these short windows of time where we were able to expand higher here on the moving averages, but each and every time we collapsed through, we weren't able to hold. And it became more and more apparent here. The rallies became weaker and weaker over time. And really since back here in June, there just wasn't many excuses to be long altcoins, because then you started to get to a period of time where they start acting as resistance, very clear resistance here, with any serious inability to be able to get above and claim it as support and start rallying off of that and clearing through some prior relative highs, right? So maybe that starts to change here, right? But the big thing above all is that if you've just been hodling this whole time, especially if you bought back during the euphoric periods, it may very well be that whether you're talking about altcoins or you're talking about Bitcoin, it may take a very long time. If it may not happen at all, you'll be able to get back to those prior highs, the prior price point where you bought at, right? And if you just take a look across the board on altcoins, guys, you will see it's been a bloodbath here, right? So Bitcoin is not going to be providing those exponential returns that it used to provide. And it's getting to the point where the returns, I think, are going to be in line with the S&P 500 and broader equity markets in the next year or two, let alone they may not be as strong as those companies which are generating earnings. And if you have narratives like AI that really continue to boost productivity of companies and really start to lead equities in the United States to continue performing higher, I think we're seeing this right now. Bitcoin is getting crushed right now, and the broader altcoin market is too, let alone. But you're seeing the S&P 500 rallied to all-time highs. So you're seeing this clear divergence between the markets. Again, another visual point here to what I've been talking about. But above all, we just got to lean into these moving averages here, guys. Lean into those short-term moving averages, because if you start to have those as your guide, if we can not try to chase bottoms here or just DCA, but keep ourselves solid in cash, waiting for price to actually do something very minimal, which is get above these short-term EMAs that cover the last couple of days of price action, make it support, and then start to trend higher here, we can still get in at a great discount and really ride the wave with the broader market. When the momentum comes here, when the market shows us here that, hey, at this price point, people are willing to buy. And when we start to see those moving averages not providing the clear degree of support that they do during uptrends, when they start to fail, you get out. You don't sell the exact top, but you certainly lock in a lot of the profits from when things really start to take off. Right? I don't want to play too much on hindsight here, but you can just see just a very clear representation here when the moving averages are working as your friend, especially when the 21 and 9 EMA in the 4-hour time frame is helping you out. So those are the moving averages we're talking about today, if you guys want to add them. The 9 EMA on the 4-hour time frame, or the 21 EMA on the 4-hour time frame, and the 50 EMA. I like using these. They are very valuable in traditional equity markets. They're valuable in crypto, and they're especially valuable when you're trading things like meme coins, which are solely based on momentum here. That's where you're really going to be making the life-changing returns in these plays. Now, I want to go ahead and also talk about an important question here that I know is on the minds of a lot of people. Nick, considering our trading mindset here, is it time to start buying into some of these plays because we've had pretty extensive corrections? I would definitely say I lean much more optimistic now than I did back a couple months ago. Right. But at the end of the day, come back to our point, right? Even though I keep open to that idea that altcoins could move lower here, we did hit some of our targets here of interest, which was the 200-week moving average. We bounced right off of it. And I'm going to come back and I'm going to keep it in the same mindset here. I'm not going to think in some overly bearish way here and tell you, oh, but historically, we see it like, 60, 70, 80% corrections, right? Market dynamics are changing here. All I care about is, can I get above those moving averages, let alone can I get above some of those longer term daily moving averages? Can I get above the 21-day moving average? And will we be able to reclaim when we start trending higher here perhaps? Are we going to be able to easily clear through that 200-day moving average? Or are we going to face some chop? That might give me some incentive to start, deleveraging, taking positions off the table. Now, when I say leveraging, I'm not saying like leverage trading, but like, just de-risking myself to the broader crypto space. That's the main point here, right? No matter how you decide to trade in the markets, right? The moving averages should be your guide. That was our clear guide back here, the 21-day, like the inconsistency on our short-term moving averages, the long-term moving averages like the 21-day, and the inability to be able to really bounce off these longer-term ones like the 100-day or 200-day. Right? We can debate all day about whether or not meme coins are at a fundamental discount here at this range. We can talk about AI and big data tokens now pulled back from around 45 billion down here to 27 billion, right? Some of these have taken significant haircuts here. Gaming tokens down from around $38 billion at the peak, now down here to 18 billion. We can see here real world assets as well, right? At a peak back in March of around $58 billion, 58.5 billion, down here to 33 billion. Testing prior low ranges, all good looking stuff where I now start to feel a little bit more interested in taking risk. But the big thing above all is it's always leaning back into momentum, guys. We have to start thinking like a trader, not as a long-term HODL or DCA or investor, right? Especially not in altcoins, right? I think you guys know that here. Like the biggest thing above all is we want to lean into that momentum here. At least when it comes to a trading perspective. We want to be able to get into hot narratives. We want to focus on the plays that are doing big things right now, that are leading the way forward in many new exciting places in crypto. And we want to make sure that the price action is there to really keep up with it. So that's the big thing here, above all, guys, from really a philosophy of how to approach markets here. We want to, definitely get into strong fundamental plays. We want to wait for that momentum to show up, though. That's the biggest thing. The momentum is going to be the key element here that is going to help you go from potentially losing money in crypto by just hodling into plays and start actually making money and locking profits in. And I think an important way to help make the job easier of finding these strong momentum-driven plays in the market is definitely focusing in on the narratives of any given cycle or broader move in crypto markets. Like, what are the things that are getting people really excited about? Where are we seeing really the price performance, which is really what speaks at the end of the day? Like, what plays are the markets seeing as more valuable today than they did, say, a day or a few weeks ago versus the broader market? And I think that, for example, as we talk about with real world assets, this is a great example here. This has been one of the best expansionary narratives in this cycle, around a 10x from September of 2023 here towards where we were back in March, late part of March, around $56 billion, right? So a clear 10x here in valuation of real world assets. And I think, again, this has been one of the few plays here that after it's had a nice correction here, a lot of people are going to keep their eye on. So what we want to do is obviously keep an eye on the sector. We want to keep an eye on the plays in those sectors as well, watch their moving averages. But beyond that as well, if the narrative itself is also holding quite strong, we can also look towards a lot of the early stage projects that are going to capture a lot of that next move. The plays in which are adding new features, new utilities, are going to be grabbing people's attention and bringing about new value creation opportunities in the broader crypto space. One of the ways that I think you guys should be keeping an eye on this sector as a whole is taking a look at AngelBlock, one of our partners here on this channel. They're one of the biggest Web3 fundraising platforms out there, one of the most quality ones, bringing some of the best quality projects and some of the most exciting and emerging narratives. They just recently had raises for projects based in the Base ecosystem, the topic of real world assets, as well as in the Solana ecosystem back nearly a year ago as one of their first projects that came to the forefront on the platform. And now they have two new real world asset based projects that are coming on. One of them is Chain Insight, our chain side, which is focused on bringing in real-world asset data on-chain, so having on-chain and off-chain data available here, again, playing into the Oracle narrative as well as real-world assets. But beyond that as well, they have Lender Network, which is focused on building synthetic real-world assets on-chain that are essentially indexes focused on broad real-world assets and being able to bake that into the broader DeFi ecosystem, something that definitely excites me. I've been always interested in this concept of synthetic assets and anything that could actually help to bridge that gap between the external world of real-world assets of potentially real estate, commodities, different areas of traditional finance, and bringing that in to the world of DeFi, which is I think going to open up a whole range of different applications. So definitely keep an eye on these projects. Again, I'm not here to give you guys any financial advice, but I think overall what's really great is, again, coming back to this point here, there are existing plays in the market which we have available pricing data for, and we can really lean into those moving averages. But you can also as well take advantage of the broader performance of narratives, seeing which ones are leading against the broader performance of crypto. You can build custom ratios as we talked about. And if you can see that real world assets are a pretty hot topic, that can help you to really take advantage of any early stage investment opportunities in the market in really quality projects. AngelBlock already filters down to some of the best, and this is going to help us at least get quality, sound, fundamental projects that have solid momentum and at least have a good chance to potentially win out long term. Again, none of that's absolutely guaranteed, but it's definitely helping us to filter down to the winning plays. Outside of that as well, there are projects in the L1 space that is usually a consistent narrative with each and every cycle, not to mention the topic of privacy, which I think is getting more and more traction here. This is going to be one of the big emerging narratives going into the next year. Again, another strong opinion of mine here that I think you guys should keep an eye on. And Al has been leading the forefront here. They just launched an EVM fork that will allow for truly private transactions. They're going through the testnet phase at the moment. They're going to be slowly rolling this out here towards a broader audience. And to me, stuff like this is really exciting. So keep it on your radar here. Participate early on in Aliphoria as well, which is one of the ecosystem airdrop programs that they're doing, where you can engage in a whole range of different early stage applications on the Al chain. And with that, be able to earn in a variety of different airdrops throughout the network itself and get familiar with the broader ecosystem of what Al has to offer. These two together, I think, are some of the really solid areas where you're going to find a lot of emerging value opportunities in the crypto space, both in historic narratives like DeFi, but outside of this, well, in new narratives and the topic of privacy, of real world assets, you name it. There's a whole range of different value opportunities here in these two products that I think you guys should keep your eye on. But I come back here again, kind of in closing here towards the data, guys. The big thing above all, I wanted to focus in on crypto today. There's definitely some exciting things going on in equities that we can maybe talk about next Monday. But the big thing above all, guys, is focusing in here in the crypto markets. There are some important questions that we have to have here about whether or not we're going to be able to continue expanding as we have in the past. If we're really going to have the fuel to be able to go in towards six-figure Bitcoin here within the next couple of weeks, next couple of months, or within the next year, it may very well be that we have a cool down period and we go sideways here for some time and we see more inconsistency in the trend. And I think that will become very clear as time passes, but by the time it's clear to everyone, it will kind of be too late for those who potentially have been buying large substantial positions up here and are going to have their hopes shot. They're going to sell low, they're going to sell into capitulation, and they're not going to realize that they're being played by a much more complex and intelligent market than what we had back in the past. As we talked about before, things like the halving event are losing their impact. The halving event inflation reduction was a 0.7% net overall inflation reduction on an annualized basis. It's very small compared to the much larger halving reductions we have in the past that have a much bigger difference on the monetary policy of Bitcoin. The bigger question we have now is, are there more net market buyers or market sellers? And when I say market buyers, I understand there's every trade has a buyer and a seller. What I mean is market order flow, and that is whether or not here today sellers are taking the best available price for Bitcoin or buyers are taking the best available price to buy Bitcoin, right? And this is what really determines market direction here. And I think what you've been seeing here since back in March is people slowly but steadily distributing into whatever remaining ETF flows there are, any remaining DCAers or kind of hopeful buyers. And now that we're down below the 200-day here, we've got to ask whether or not we're going to be able to get above it, because if we can't, and people are still selling here, and that means we've got a lot of supply that needs to hit the books before we can really find our capitulative lows. That's the important thing to keep in mind, guys. Your momentum moving averages are going to let you know when it's time to go long. And so far, we're seeing some positive signs in the shorter term time frame, testing up close to that 50 EMA yet again. We're going to see if we can get above there. Playing with the 200-day so far, it's playing as resistance. It's not a good look. Until we can get above there, we can't be really optimistic on markets. So that's it for today's video, everyone. Thank you all so much for letting me have some time to ramble as always. If you enjoyed this video, if you liked it, consider dropping a like. I hope it provided some food for thought, whether you agree or disagree, guys. I'm not here to be a perma bear by any means. I'm here to protect my capital. And I'm here to make sure that the returns that I'm looking to make are clearly presenting themselves within the chart. I want to make sure that there's actual price action that gives me the cue that it's time to go long. All right, guys, take care. Hope you guys have a fantastic rest of your week, and I'll see you all in the next video. Take care, everyone.